Ladies and gentlemen, good afternoon. British American Tobacco is currently leading in our 100th video celebration YouTube stock portfolio buy poll. So, since this is leading, I figured I would do something I didn't do the last time I talked about BTI, which is look at discounted free cash flow for a moment. So, the first thing I want to do when trying to model discounted free cash flow is come up with some reasonable number for cash flow growth over the next, say, 10 years, whatever the growth stage is in the model. This says earnings forecast to grow 8% per year. It doesn't say how many years that's over right here, but this is more for illustration purposes more than anything. So we'll use that kind of as a starting point in our calculation. Now, if we do that, 8% growth rate, and apply a standard 10% discount rate, you could theoretically pay up to $50 and still get about a 10% return on your money. Now, interestingly enough, free cash flow for BTI has grown at 10.8% per average per year over the last 10 years. So, in actuality, I could see a world in which that over the next 10 years, that 10.8% slows to something like an average of 8% over the following 10 years. Since it follows the principle that, hey, as any stream of revenue or cash flow grows bigger and bigger, the growth rate should at some point get smaller and smaller, because the bigger it is, the harder it is to grow it at a high percentage, right? So this pretty well follows that principle. So I don't necessarily think this is completely unrealistic or out of the question. However, I also know that sometimes, projections tend to be a little bit on the rosy side. Sometimes things unexpectedly go wrong and underperform, or maybe you'll have individual years that are just, random gutterball trash years that kind of throw everything off. So what if you assume that maybe something like that happens with this company? Well, let's drop that 8% down to a 6%. Say the analysts are off by a good 20 to 25%. Well, even still, you could pay up to almost $40 today and still potentially expect the same, 10% return, which means you would get a slightly better than 10% return, assuming that these, growth numbers play out this way, or relatively close to it. So you've got a little bit of a margin of safety in terms of that. And again, I think this is 100% realistic. I could envision a world where this happens. Now, you could run your nuclear apocalypse scenario and kind of figure out what happens if there's zero growth. Now, if there was zero growth, to be in the green, you would have to drop your desired return down to something like 4.5% or so. In fact, I'll just demo that right now. So just zero growth, period. And again, and this is not something that I think is likely to happen or anything, but it does go to show that even if there was zero growth, because the cash flow is so consistent, you would still get, basically the same return as like a bond or a CD or something, So that's kind of an interesting, way to look at it in terms of like margin of safety. Like you have, if you were to, buy the stock at today's price, and then if suddenly something goes wrong and it gets zero growth, you would still probably see some kind of return out of it. But, that's obviously not, one, I think not the most likely scenario, and two, not what you want to happen. But, a lot of people do just buy these stocks for the income, not necessarily strictly for the value of the future stream of cash flow or to beat the market or anything. So different strokes for different folks, but I think all in all, there is definitely some signs of undervaluation with this company, and it could be a very, very interesting addition to our YouTube portfolio. Pays a hefty dividend, so seems to have a bit of a shareholder focus. They were doing buybacks but had halted them, so maybe they'll do some more buybacks in the future. And again, being an international tobacco company, they have the advantage of being able to grow into those emerging markets, which is why I think that there will be a mid to high single digit growth rate, realistically for this company. But hey, it could go either way. Anything could happen. But I think it's really more about what the likely scenario is, and that's our take on BTI, ladies and gentlemen. Make sure you join the Discord if you haven't already. Vote in the community poll. There's 2 other options, AbbVie and Jackson Financial. And make sure that you subscribe to the channel to continue participating in this conversation. Take it easy, everyone. Cheers.